Right, what is up, y'all? My name is Tyler Deveraux. I'd like to officially welcome you to Holiday Cove Apartments. Man, we're so excited to be and just grateful, man, to be in a position to bring you this investment. We've been tracking market indicators, staying in touch with brokers, and just waiting for the right opportunity to surface for nearly a year now. And listen, that's because there's been a correction, and being on the right side of a market correction takes patience. And that's exactly what you'll see with this investment, which is why we're so grateful and excited to be in a position to present it to you. Forsyth is a great area, man, in middle Georgia. It's 20 miles north of Macon, 50 minutes south of Atlanta. I'll explain why we're so bullish in this area. But in short, it checks all the boxes. In fact, we own another property, like the last property that we bought about a year ago, right down the road from this one. It's performing very well. It's actually, by the way, that's how we were able to lock this deal up before it went to market. We had already, bought and transacted from the broker. So we were able to source this as a true off-market deal. I'll explain why that's so powerful. But today I'm going to walk you through the property. So some of the problems, how we're going to fix them, what that will mean to the bottom line. And on a side note, before we dive in, this property is gorgeous. It's surrounded by thick green trees, has a great feel to it. The location is great as well. It's close to retail, has easy access to the interstate, and a brand new Chick-fil-A, which is always a plus. But still has a super private feel, which is phenomenal. So a couple of the legal disclaimers that I got to read. What we're about to go through is not an offering. The official offering is going to be done through our private placement memorandum that'll outline all the risks and the terms of the deal. This presentation is for informational purposes only and is not intended to be a general solicitation. So by accepting the presentation, you also agree to keep the information confidential and use this merely as a way to evaluate a business relationship with us. Also, the returns, like the ones that we're about to discuss, they're forward-looking statements. So as much as I would love to be able to predict the future, I haven't quite figured that out yet, so I'll keep you posted. That being said, though, all the forward-looking statements are based on our projections of the market, the asset itself, and once again, from our experience with other properties in this exact same market. So as with everything, though, the investment is subject to uncertainties that could cause actual results to vary. So the private placement memorandum, also known as the PPM, will outline a number of the risks for you to consider on this deal. I'll skip through the table of contents. We'll just dive right into the meat here. I'm going to give you a high-level overview of the investment. And then we'll dive into some more of the details. So Holiday Cove is a 96-unit garden-style apartment built in 1987. Has a great unit mix, 75% two-bedroom, two-bath, which that's exactly what we look for, man. It attracts a more qualified tenant. They usually stay longer. They're easier to rent in any phase of a market cycle, which is great. And then location is also absolutely a highlight. Like I mentioned, it's located in middle Georgia. Just south of Atlanta, north of Macon. And once again, our relationships and track record in this market allowed us to source this deal for $10.1 million. This is a true off-market deal. And once again, just to clarify why that's so attractive, the majority of the time what we do is we compete against a number of other buyers when we're buying a property. Which what that does is it inevitably drives up the price and then forces us to walk away from deals regularly, especially over the last year. But because we were able to, source this deal off market, we're able to avoid that process. We're one of like 2 or 3 people to even see this deal. And we were able to lock it up off market before it went to market. And that was ultimately because our relationship with the lead broker, who we had already bought properties with, allowed the seller to feel comfortable, awarding us this deal without them going to market, which allowed us to lock it up for the purchase price of $10.1 million. And because of that, investors will be able to choose a preferred return of either 6 or 7%, depending on the investment amount, and projected annualized rate of returns, also known as ARR, are going to be in the 14 to 15% range, depending on your investment amount. You're going to receive those returns through a combination of cash flow, by the way, throughout the whole period, and as well as equity once we exit the project. We're going to be raising $5 million of equity for the project, and as sponsors, we'll be personally guaranteeing the loan. Plan to cover approximately 10% of the equity needed for the project, which means our capital will be invested right alongside your capital, which is exactly how it should be. Now, I lead with all of that I just went through, and I'll dive in even more. But I do that because there's such a divide right now, which is very common during a correction of any sort. Some of you listening to this right now, you are absolutely certain about investing. I didn't even say excited to invest right now. That's because of a correction. Well, others are uncertain, and I would even say fearful about investing right now because of the same thing, a correction. Right? Here's what's interesting, though. The sellers, they're exiting this property for a couple reasons, but the primary reasons are fear and uncertainty. And why is that the case? That's because with a correction comes risk, and they would rather take their wins and walk. So let me give you some context here. They've owned this property for 4 years, have naturally benefited from an economic upswing. But that being said, due to market uncontrollables like interest rates and insurance, they've seen their exit value dip by roughly 10 to 15% the last year and a half. They wanted to sell this a year and a half ago, but they wanted more. That's why they're selling. Hell, like I said, they wanted to sell a year and a half ago or so, but couldn't get what they wanted, and they still aren't getting what they wanted, what they had hoped for. But they've decided to sell now because they don't want to lose what they've gained. Which, y'all, that is exactly why we're buying this deal and investing alongside you in this deal. A year ago, this deal doesn't exist, and I know that to be true because we've been actively looking for deals in this market for over a year now. It wouldn't exist because sellers were overconfident, and now their expectations have been brought back to reality, making them a little bit more uncertain. And listen, I'm not certain about much, but I am very certain that the time to buy is when sellers are uncertain. See, we understand that there's risk. There's risk with any investment in any environment, but you'll also understand that and see and understand that, man, we know how to mitigate those risks. One way to mitigate the risk, by the way, we're on this slide here, is market trends. Geez, we love how middle Georgia is trending. For reference, okay, there are 4 major influencers that shape what people buy, where they live, those kind of things. The government, the economy, technology, and societal shifts. They change the future just like they've changed the past. And as we look at those, Georgia ranks number 1 in the nation in terms of having a business-friendly economic development committee. They also rank number 7 in the nation for strongest business environment. And these are really important because that eases location and expansion processes for businesses, which is why businesses continue to move here. The economy, this is the big reason why Georgia is ranked 15th in the nation in regards to economy, 13th for fiscal stability and future growth, and why they have the number 1 business growth rate in the entire country. Technology is another huge factor as well. So as for technology, Georgia has made a huge push to grow in this sector. Like it has been a huge focus of theirs. And they've been able to grow 20% year over year and jumping up the charts to become the 23rd most innovative state in the nation, which is awesome. Societal shifts is the 4th one. Okay, young adults form the most number of households each year. Now, these are prime. Obviously, that's the demand for our product. These are people who are prime for renting what we have, and because of that, it's a big metric that we look at. And as you can see, Georgia is well positioned, to benefit from those households, ranking 11th in the nation for growth amongst that demographic. Now, this offering is available for accredited and sophisticated investors only. And by the way, we haven't done an investment for sophisticated investors for quite a while, man. So we're excited to offer this to y'all as well. So it has a minimum investment of $50,000. The preferred return will be 6% or 7% as mentioned, and that'll be determined by the investment amount. And those that choose to invest over $150,000 will receive a 7% preferred return. Preferred return just means that investors should get paid first, or get paid first as they should. But that's capped out. This preferred class A1 is capped out only for the first $3 million of equity invested. And funds will be due by June 5th. But listen, the availability of all share types will be determined on a first come, first serve basis. Those of you who have been investing with us for a while now know that those shares go quickly. So just, fair warning, those are on a first come, first serve basis. Now, the returns will start accumulating or accruing, immediately upon closing. And then the first distributions are planned after that first year. So this preferred class A2, that's the minimum investment of $50,000 with a 6% preferred return, cumulative return of 102.7%, and then the cumulative return on the class A1 with the minimum investment of $150,000 and the 7% preferred return is 109.20%. Okay. This little snapshot right here is a snapshot of the projected return breakdown. This one, the preferred class A2, this diagram shows the breakdown for each $50,000 that are invested. So you have, a little over $20,000 that will be in cash flow over the whole period, a little over $30,000 of equity returns. Once you return your initial investment of $50,000, that turns your initial $50,000 into $101,125. And once again, equals a cumulative return of 102.7%. Now, Class A1, like I mentioned earlier, those investing a little bit, 150,000 or more for Class A1 will receive a 7% preferred return, making these, returns even higher. Once again, funds are due by June 5th and are on a first come, first served basis. Now, I want to quickly just touch on return projections though, because those of you who have been investing with us for a while now know that we absolutely do not take return projections lightly. Projections are awesome. Optimism is great too. But man, there are a lot of things that just can wipe out our initial return projections and the initial optimism that went with it. We are acutely aware of that. I take that into account many times before we ever show you numbers on a screen like this. So even when we show you those numbers, you'll see that they are very conservative. Take the cash flow returns for an example. This property is a great cash flow position right out the gates. We obviously projected the cash flow even more and better as we implement the business plan, but we don't account for anything more than the base preferred return until year 6. And when I get into some, even more of the details, you'll see that, you'll see how conservative those are. You'll see those details. Those of you who invested with us for a while now, you've heard me say this before, that we don't take return projections lightly. But listen, you've also witnessed it in real life, like what that actually means. And we know that that's why you can continue to invest with us, or why you choose to continue to invest with us, which we couldn't be more grateful for that. And for those of you who are new, first, welcome, on board. We're excited to have you on board. Second, in real life, which I'm sure you already know, things just don't go according to plan. The only thing I know for sure is that things won't go according to plan, which is why, as great as the property and the area are, in my opinion, they should never be the deciding factor. The largest factors behind deal performance are the operators behind it. And if you take your eye off the ball, even the best assets in the best markets will underperform. But on the other hand, you have a solid operator who is dedicated to the cause, and they will find a way to win in the long run. In other words, listen, this isn't our first rodeo. We know what it takes, and we're dedicated to getting there. That's for sure. For example, we get paid up front to guarantee the loan and structure the deal. Standard on every deal that we've ever done. But instead of cashing that acquisition fee up front like usual, a large portion of that is going to be held in an escrow account as a reserve. And if we fall short of projections, your cash flow projections, that acquisition fee will be used to supplement your cash flow returns. But however, listen, when we hit our return projections, the property will pay for itself. We'll pay for investor returns, which means we'll be able to cash that out. Now, why would we do that? Because, man, we know what it takes and we're dedicated to getting there, but you're trusting us with that. Like, we're very confident in this property, but we also understand the market that we're in. There's, once again, like I said, fear and uncertainty. So one way for us to remove and help with that fear and uncertainty is to show that we are committed to the deal. One way is to invest a good chunk of, to cover a good chunk of the equity. Another one is even the fees that we get paid, we leave them in an escrow to supplement, once again, your cash flow returns, in year 1 if we need to. Now, plus we also just totally lowball the returns to make sure that we'd hit the projections. So there you go. Now, as a partnership, we own just over 3,700 units. Those 3,000 units and years of experience, they do not come without mistakes or what we call learning experiences. We have an infinite amount of those. And once again, those of you who invested with us since the beginning, you can attest to those. You've been a part of many of those. But what we've learned from those are what make us so valuable as a partnership, and you know that as well. So I mentioned, that in real life things never go according to plan. The initial plan is important. It is very important, but That isn't what exceeding return projections comes down to. Exceeding return projections are in direct correlation with the operator's ability and willingness to solve problems. Outside circumstances, they'll affect the path, but it's our job as operators to make sure that they don't affect the destination. Once again, it's problem solving 101. So first, thank you for sticking with us through those learning lessons and continually trusting us with your investment capital. Man, we're very, very grateful for that. There is no way that we've been able to acquire over $400 million of real estate without y'all. Y'all have played, man, a role in almost every one of those transactions, those acquisitions, and those past investments together play a big role in why we continually have opportunities like Holiday Cove presented to us, which is it's just so fun. So listen, regardless of whether you'll be joining us on this investment or not, thank you. Sincerely, thank you. And for those of you who will be investing with us for the first time, welcome aboard. Once again, we're excited to have you on board. And it's about damn time, by the way. So let me introduce you to ourselves, okay? We have myself. My name is Tyler Deveraux. I'm the lead sponsor, managing partner of this deal. And, most of you, well, all of you know one or all of us, some way, somehow. And then, we have a more detailed write-up towards the back. But, and listen, as per usual, though, you feel free to reach out if you have any additional questions about us or the investment. Our contact information and how to get a hold of us will be in the property packet here as well. So high-level overview, though. Okay, everyone here except for Hannah and Grace work some way with MF Capital Partners underneath that umbrella. I am the CEO, Tyler Deveraux. I'm the CEO and founder of MF Capital Partners, and will act as the lead sponsor for the project, overseeing this in the company. Eric Blackwell and Lindsay Daniels, and they've been been in the real estate space, first off, for over 20 years each. Lindsay is the lead asset manager for the project. She's been in property management, asset management for 20 plus years, like I said. Eric is an absolute wealth of knowledge. She oversees acquisitions and works with Enrique and Ashley in investor relations. They are all amazing people. You have Rowan. A lot of you know Rowan as well. She is our chief operations officer. She oversees business operations at MFCP as well as our education company, the Multifamily Mindset. By the way, I am the CEO and co-founder of the Multifamily Mindset as well. It's one of the largest multifamily education companies in the nation. I'm very, very proud of that. And Edwin is our director of finance. He'll play a big role in the financial asset management of the project. And then we have one other team member that will be officially joining us in about 3 days. But I will introduce you to him after this, man. And he's a great pickup for us. He's been in the investment space for well over a decade, has managed billions of dollars, billions with the B, billions of dollars of investor money, and has an amazing track record, as you'll see, and will also play a huge role in the financial asset management of the project. We're very, very grateful for that. Now, Grace and Hannah are amazing partners on this deal as well. Grace has over 10 years of finance accounting experience with small to large scale private and public companies, as well as 20 years as a licensed real estate broker, owner, operator for multiple real estate companies. And then last but not least, Ms. Hannah Zhang, who along with owning multiple commercial properties, owns a property management company overseeing approximately 300 properties. Man, you have a great team behind you on this deal, one that I'm very, very honored and grateful to be able to call a team and to be able to work with. Just sincerely honored. Here's a quick snapshot of our track record, which is outlined in more detail later in the property packet as well. We've taken 15 properties full cycle, average cash-on-cash return to investors of 10.4%, which exceeds our average projected return of 7.85%. We have average annualized rate of return of 24%, which exceeds our average projection of just shy of 20%. And then we've been able to create $73 million of equity on those projects that we've taken full cycle. Now, current investments, right? We have 200. We have current assets under management. We have values of just over $264 million, and have partnered with 360 of you investors on those projects. Once again, many of you listening to this are those investors, and I love seeing this number grow, and I'm honored that so many individuals have trusted us with so much of their investment capital. It's an amazing thing. So, investment highlights, okay, real quick as we wrap this section up. We've leveraged our lending connections, our track record to source a new Fannie Mae loan with a 7-year term and a fixed rate of 6.2%. We're also able to lock up 4 years interest only on this deal, by the way, which means we can cash flow this property very well. The hold time will be approximately 5 to 7 years. And in a nutshell, our strategy during that time is going to be to enhance operational policies and procedures that are currently not in place and maximize rent increases by upgrading the interiors to a premium product. Like over 50% of the interiors are still classic product. We'll take those to a premium product, and then we'll add amenities to improve the community and renter satisfaction. And those improvements break down to approximately $8,660 per unit that we'll be putting into the deal. By the way, you also benefit from, if you don't know this, amazing tax benefits in the multifamily space, such as cost segregation, bonus depreciation, which all that means is that, and the cash flow that we talk about, the returns we talk about, you keep more of it. Phenomenal. If you don't know this, you benefit from phenomenal tax incentives on these multifamily assets. You can certainly talk to your accountant about those. Now, those are the highlights, okay? Those are the highlights. So many of you, I know this is a pre-recorded video, and we track, where you guys fall off. This is usually where you'll fall off. A number of you already know this is what you want to do, that you would like to reserve your investment. So you can do that at any time, by the way, by going to the top right corner of this data room. You'll see an Invest Now button that you can click and reserve your shares. For those of you who want to come with me for the rest on these, the nitty-gritty details, hey, let's dive in. If you do bounce, I won't know. It's pre-recorded, so do as you wish, my friends. But let me walk you through some of the investment overview, okay? This is the property outline. Property, once again, I mentioned, is tucked away nicely, man, off a busy road. You have the management. This is the entryway right here. So you have the management office right up front when you enter the complex, which is phenomenal. Nice, ample parking all throughout. And just the layout is phenomenal. And once again, the management office and other buildings have newer roofs. A number of them have newer roofs. The pool is clean and running. It'll need a little bit of work on the platform area outside, but all in all, in pretty good condition. And the mailboxes, I know that might seem silly that we show the mailboxes, but it's a big thing for tenants to have solid mailboxes. And these are new, nice mailboxes. These exterior upgrades. So part of our capital expenditure budget that I'll break down for you here in just a second, that we'll raise these funds for, will cover these kind of things, right? Landscaping, property lighting. We'll paint some wood exterior. That's a big deal. We're going to pave the parking lot and then update some exterior signage. We're going to put fences around the units, and then as well as around the dumpster, and then LED exterior porch lights. Repair some exterior concrete. We're going to renovate the clubhouse. That's one of the things the leasing office is. A huge part of the project is new tenants coming. It's one of the first things that new tenants see in the leasing office is, it could be a lot better, is what I'll tell you. And I promise you that stuff makes a huge difference with occupancy and what you're able to charge for rents. And so we're excited to do that. And then we'll put new AC units where needed. The interiors, most of the cabinets are in great shape. I did due diligence on this property with my team just a couple weeks ago, and walked every single one of these units. And listen, most of the cabinets are in good shape. We're going to be updating the faces and painting the cabinets. We'll put on some better hardware. We'll update some of the appliances where needed. And right now, once again, a bunch of the units have not been touched by the previous owner, which leaves a lot ready for us to still upgrade and improve, which is powerful. The interior renovation that we'll be doing, the big ones are adding the washer and dryer. There's washer and dryer hookups in every unit. That's a great other income item for us there. Once again, most of the units already have the connections, but they're not producing any income from those connections. In fact, what's crazy is a lot of the units even have washers and dryers. They're just not charging for them, which is pretty crazy. We'll definitely change that. We'll upgrade the hot water heaters, and then once again, new appliances in some of those premium units. The investment overview. We have 1 bedroom, 1 bath units. This R to the right stands for the renovated units. So what you'll see here is the rents that we're achieving for these units that are renovated. And for our business plan to work, so you do the math here, but for our business plan to work, we need to increase the rent by an average of $47, which, as you can see, is extremely attainable. It's extremely attainable. Now, AMC is our management company. It's our preferred management partner. We love them. We, one of their largest operators as well. In fact, crazy enough, we poached Lindsay, our asset manager from AMC. So she works with them very well. Knows and they know our takeover processes, our systems. We've done that and executed those things on multiple deals together. And our big focus, listen, is community. The number one reason tenants vacate, it's not handling maintenance requests, but the number one reason that they renew is a sense of belonging and community. And we are big on that. So every step of our takeover process and everything is with community and overall tenant satisfaction. That's priority number one. And then once again, we talked about some of the value adds that, we project now, not in the projections. I told you we need to only increase the rents by $47 to hit our business plan, but we project that we'll be able to, increase the rents by $165 per unit with those value adds that we'll be doing. And just for context, okay, as we reduce tenant turnover, increase tenant satisfaction, and increase the rents, that'll drive the NOI and overall returns up, which we project you'll also enjoy that because that's your returns. Now the takeover process I mentioned is huge. We do it in 3 phases. It's very important. Phase 1 is, and takeover on any asset is very important, but all of it at any time of the market is important. It's all about making sure that tenants feel taken care of, setting proper expectations, and then, handling those maintenance requests. I told you the number one reason tenants vacate is not handling maintenance requests. And so it is putting a plan in place for any outstanding maintenance requests that these tenants have so we can get them taken care of. Now, the capital improvements that I mentioned are detailed here. We've accounted for a little over $600,000 in capital improvements, the bulk of which will be used to enhance the interiors. That being said, we bid out every single project, okay? We bring even a number of those projects in-house. So we hope to come in under budget on some of these. And those extra funds, when we come in under budget, go into what we call a reserve account, and they're distributed to you as investors, when appropriate on the deal. Now, the return summary, I'm going to bullet point some of the return summary. This is how that $5 million of equity is going to be utilized. The down payment is going to be 30%. It keeps the property well leveraged. The acquisition loan guarantor fee is $606,000. And like I said, though, $101,000 of that will be held in an escrow account to supplement investor returns. And so it's only paid out if we hit our return projections. If we hit the return projections, we get it paid out. If we don't, well, it gets paid out to you. Once again, a way to just show you the confidence that we have in the deal. You'll find it hard pressed, man, for any operator to do that. We are very confident in this deal. We've also, like I mentioned, raised a little over $600,000 for capital improvements, which I've just outlined. We have a solid operating reserve in place, which is another big deal. Once again, we are very, very conservative investors, and you'll see that as we dive deeper into the financials. Now, the current financials, okay, well, here we go. This will give you a good pulse on this. We're extremely conservative with our underwriting projections. And that's the reason we do that is because one of my many learning lessons that I've had is a partner who was extremely aggressive with underwriting projections. We do not do that. We're super conservative. For reference, okay, the return projections like that we have projected, these returns we projected, account for us actually lowering the NOI in year 1. Which means those returns that we projected are taking into account that if we'll still hit those if we even come in lower, not a ton lower, but lower in year 1. Now, for reference, the return projections, we don't plan on them lowering, okay, in year 1. So if we improve them, which we obviously plan to do, we'll be in a very, very good spot. Once again, real estate's a risk. Our job is to mitigate that risk, and one way we can do that is be conservative in our underwriting projections. Especially in an environment like this, which, man, that's why we're so excited about this deal and that this still pencils out with, the conservative underwriting that we did. Now, there's a lot on this slide, Kay, and the screenshot's a little blurry, so bear with us, but this is our 7-year pro forma breakdown. A couple of things that you're going to note as you look through the numbers. The rent growth, we've only accounted for 3 to 4% rent growth each year. It's very, very, very conservative. The vacancy, we have 9% in year 1, and then years 2 through 5, we do our standard 5%. Concessions, we've accounted for 1% in the first 3 years, also very, very conservative, and then 0.5% each year after that. Bad debt is a receivable that is no longer collectible, like rents that haven't been paid. Bad debt's estimated at 2% for the first 3 years and 1% each year after that. And the non-revenue units, these are units that are non-revenue producing, such as like model units. We've accounted for those in vacancy instead of including them here, which is why it shows blank there. For expenses, we account for 2% increase in taxes and 1% increase on the other line items per year. We found that gives us enough of a buffer to still hit our projections. The only line item that isn't increased by 2% each year is the management and asset management fees. Those are fixed and they're based off of the effective gross income. Payroll, we have full-time employees on this property, which is what that line item accounts for. And then the lender requires a $250 per door in capital reserves each year. That number doesn't change, but we will use it for capital expenditures for the property when they arise. And then if they don't, it's stayed into a reserve account with the lender. The debt is also a fixed debt. It's fixed for the first 4 years at $438,340. It's also fixed the remaining 3 years at $519,000. It jumps up because we have 4 years interest only. In year 5, we start paying principal and interest, and so you'll see the payment jump up, but we'll also be paying down the principal balance. So you'll see those returns accounted for there. And then the total cash flow after debt service in year 1, $220,642. Once again, this deal is very, very well positioned right now, which we're extremely excited about. These are the projected returns deal side. So annual cash 8.8, cash on cash 8.8, return 15.14, and the cumulative return 105. Now these vary depending on your asset class, your asset allocation, meaning how much you've invested into the deal. But those are the deal side of things. Now each one of these slides get a little bit more detailed on what your cash flow returns will be each year. And then I'm going to go the market overview we've really already talked about, right? I talked about Georgia. Forsyth, I'll talk about a little bit as well, has a great median income. Population growth rate is 1% higher than the national average. It has a great and projected population growth rate is even better. Once again, there's lots of demand flooding into this Forsyth, middle Georgia area that we are just very excited about. Lots of jobs coming into the market, which is why you see the unemployment rate down from 4.2% a year ago to 3.8%. And once again, we've been tracking these numbers in this market for a year. We know what's going on in this market. We just need to make sure that the deal that we source in the market pencils out, and this one pencils out, which we're so excited about. So the growth rate, what we do is we target a 1% employment growth. So 1% total job growth. This is 1.46% job growth, which is phenomenal. And then it's ranked 11th in crime. It has one of the lowest crime rates in the entire nation. These are some of our rent comparables. Once again, far below market rent for our true comparables. Vineyard Place and Griffin, they're two of our competitors. And one thing to note, by the way, there's only 357 units in all of Monroe County. So we're going to own a good chunk of those units. Which I'm just telling you, the demand in the area is phenomenal. And once again, now we own a number of those units, and they need to be, and there's no more under construction right now, which is just phenomenal. Now, management team, you can go through and you can read through the management team stuff as you're, look at the property packet in the investor portal if you would like to. But I want to go through and bullet point some next steps as we wrap this up, okay? So if you're watching this, you're probably in the investor portal. The investor portal is where we're going to be housing all of your documents. We track investment performance, asset information. So if you ever need any information about the actual asset, Holiday Cove itself, you'll find that in here as well. You can look it up on your phone. Once again, tax documents, anything that you need is here in the investor portal. It's a very, very user-friendly and a powerful tool for you. So make sure you bookmark this page so that you can come in here regularly. Now, the next step here, you have a couple of steps. So step 1, you review the property packet. If you're reading this or watching this, listen, you've probably already completed that step, so well done. If you just skipped to the end of this video, well, I'm offended. Go back and watch the rest. You go take a look and review the data. And then step 2, once you've done that, is to complete the subscription. So in the top right-hand corner, you'll see that Invest Now button. It looks just like that. And then you'll click that to begin the investment process. Once you've signed the PPM electronically, which you do all of that just right there within the portal, you'll be able to, we'll send you wire instructions for you to then wire the funds. And then just once again, funds are on a first come, first served basis. So they are due by June 5th. But once again, this is the first offering we've had in a year to present to you all. I just want to set a proper expectation because it's the first investment that we brought to you all in nearly a year. And so, listen, these shares will go quick, and a number of them, once again, are already reserved. We already have nearly $1 million reserved on this deal from a soft reserve that we did. So just want to clarify, funds come on a first come, first served basis. We've talked about the different classes of tiers that we have. And then, my friends, there's your offering. You're already in the portal, so you should be good. But if you're watching this somehow somewhere else, you can scan that QR code to get access to the investor portal and reserve your shares. Y'all, once again, thank you for sticking with me on this video. Thank you for considering investing in Holiday Cove Apartments. And man, for those of you who are investing in Holiday Cove, we're excited to have you along for the journey. This is a deal that is a long time coming, and we're excited and grateful once again to be in a position to bring it to you, to participate in this deal with you, and man, become partners on this deal. So y'all, appreciate you. Let us know if you have any questions. Certainly reach out. We would love to help. You can find all the contact information right there in your investor portal. And as always, y'all, take care. We'll see you soon.